All right. Today things are getting very interesting, and SPY was up 0.42%, and we are at this critical level that I drew out from the weekly chart, which is this level at SPY 430. And I said that from 430 there was a good chance we would end this pullback and start towards 480. And that is still how I'm viewing this market, knowing that I have very well-defined risk right here at SPY 430. Now, intraday, you can see we did cut below it just a little bit, and that was actually a very oversold condition, way outside the lower Bollinger Band, so there's no surprise that we bounced near the high of the day. So in order for this to remain bearish, we need to bounce to a lower high and continue to see impulsive selling. And if we do get this bearish scenario and we continue with impulsive selling, we'll be looking for a touch of that trend line right around 426, and then the gap close at 423, and the next critical level at 420. Now below 430, I think there's a good chance we're going straight to 420, but I'll leave 427 and the 423 gap close on the chart as well. Just remember, below 430, there's a very good chance we are going to 420. Now, as you know, that is not the scenario I prefer. I think if we're going to 420, we'll know it very soon, but I prefer the scenario where we're going to hold here at 430, start to see an impulsive bounce, and then obviously we'll need to see a higher low and a continuation of that bull trend. And I think there's a good chance in October we are going to start filling these gaps above, and we have gaps at 438, above 447, and above 455. So we know those gaps will fill, we just have no idea when. So it is possible we can continue to go lower towards that target at 420, and then still at a later date go fill those gaps to the upside. So 430 is a very critical level, and yes, you can take on long risk from that level because it's a strong support on the weekly chart. So this is a market where you're going to have bears that are bearish below 442, and then bulls that are bullish above 430, and then even longer term bulls are likely going to stay bullish above 420. And it's not until the market breaks down below 420 that we'll likely see people agreeing that we are no longer in a bull market. But you can make a case this is still a bull market while SPY is above 420. So how you trade it, whether you're short-term, long-term, swing trading, day trading, is completely up to you. Just know the critical levels. And right now, the most critical level that we're close to is 430. I think there's a good chance we're going to bounce from 430 up to at least fill the gap at 438. And then if we get the lower high into another lower low, we'll be looking for the gap fill at 423 and the next critical support at 420. So 430 is how you're going to know if we're going higher or lower, because we need to break down below 430 to confirm that we're going to 420. And if we just start impulsively bouncing out from here and we get a higher low into a higher high, I think the pullback is over and we're going back into the bull trend to finish out a strong Q4 finish. So Q4 is right around the corner because October is going to be here by next week. And then because of seasonality, we're going to want to see a strong start in October to confirm that we're done with the pullback and we're going back into the bull trend. Or if you're a little more risk averse and you don't want to try to catch a falling knife, if that's how you view the market, that's completely fine. Wait until we can reclaim these moving averages and get back above this resistance zone around 442. So you're either buying the dip around 430, knowing that's your risk level. Below 430, we're going to 420. Or you're staying short while SPY is below 442. And of course, you should be locking profits at support. So at 430, I don't think this is a good risk reward short. I think you're going to see risk reward buyers, and we're going to see the bulls taking over. On the NASDAQ 100 triple Qs, we were up 0.47% today, and just like SPY, we opened outside the lower Bollinger Band, so we were extremely oversold, which means we're likely due for a bounce. And from here, it's going to depend on if we can bounce to fill the gap and then start making higher lows, or if we're going to get a lower high into the next lower low and continue to the next leg low at 347. Now, one thing I want you to pay attention to is that the triple Qs are relatively stronger than SPY, which is usually very rare, but I think it is a bullish sign that tech is holding up better than the S&P 500, because as I just showed you, SPY broke down to a lower low to get to 430, but the triple Qs did not break down below 355 to get to 347. So what that means is the triple Qs have the potential to double bottom from this zone right around 355 to 357, which would be very bullish if we double bottomed, got the breakout above 378, and confirmed that next leg higher to retest the previous all-time high, which, as you know, is my preferred scenario. So the triple Qs critical risk is right here at 355, and if we break that, there is a very good chance we're doing a very quick trip down to 347. If we break 347, that is a bearish breakdown, meaning we're likely going all the way down into the 330s, and that is going to be a very steep decline if we see that. So manage your risk right here at 355, and then instantly get risk off if we start to break down, because then we will be looking for high volume selling to much lower prices. Now above 355, there's a good chance we bounce up to fill this gap above 364. And then once we get there and close that gap, we're going to need to see if we can continue to push through the moving averages and break that critical resistance at 370. So critical support and the triple Qs will be right around 355, and the critical resistance zone will be this gap fill above, but more importantly, we need to break back above 370. If we can clear all of that resistance, I think we're going to see a very strong rally in quarter 4, but we need to see the price action breaking through that resistance zone and breaking out of this current downtrend. So expect there to be plenty more sideways action, because it does look like the triple Qs is going to wedge into the 360s, and then maybe we'll see a breakout down below support or up above resistance sometime in October. On the Dow Jones, we were up 0.12% today, and the Dow Jones finally closed the gap that we had at 339, so we can delete that. And we can see again, the Dow Jones is also making a lower high into a lower low, just like we see in the S&P 500. Now this does look like a clear double top rejection from 350 when we broke down below the neckline at 345, and it looks like we've largely hit that price target from the double top, and we're extremely oversold outside the lower Bollinger Band now for the 3rd day in a row. So I do think there's a good chance we are going to bounce from here and fill the gap above right around 344, and the critical resistance is still that neckline breakdown at 345. So once that gap fills, it is going to be very critical resistance in the Dow, and if we reject from there, we will be looking for a trip down towards 336, and if we can't hold that, this is going to look like a bear trend that's picking up momentum, which means we could head all the way down towards 327. So pay attention, these are confirmed downtrends of lower highs and lower lows except for the triple Qs, which means they could turn into falling knives that just keep falling. So if you're buying the dip, understand you are going against the trend in the Dow Jones, and you need to be locking your profits at resistance, which is going to be right here at 341 and the gap fill at 344. On the Russell 2000 IWM ETF, we were up 0.45% today, and the Russell finally filled that gap, which is down here at 176. So we can now delete that gap fill, and that was our target on the breakdown below 183. So we have officially hit the downside target, and we're going to be looking for the possibility of an oversold bounce from here to fill the gap just below 180. So as you can see, a lot of these indices look oversold and due for a bounce, and that could be a sizable bounce to fill the gaps above. But from there, because we have downtrends, we're looking for a lower high possibility and then a continuation of the downtrend. So critical resistance in the small caps is still 183 because that was the previous critical support. And in order to get bullish, we need to reclaim a lot of these moving averages and get back above critical resistance. If we continue lower, we're likely going to the bottom of the range just above 170, and we also have a gap to fill just above 171. On the ARKK ETF, we were flat on the day, only going down 0.05%, and we did close outside the lower Bollinger Band for the 3rd day in a row. So once again, we look oversold, due for a bounce, and the bounce could take us up to fill the gap at 40.78. From there, we're looking for resistance because that was the breakdown to the lower low. So right around 40 to 41 is going to be a critical resistance zone. Any rejection from there will likely take us down towards the gap fill at 36, and you really shouldn't be getting bullish until we can break all the way back above 44.5. On the VIX, we were down 1.75% today, and the VIX is getting up towards that resistance at 18, and that is where the VIX has been crushing. So I think there's a very good chance the VIX matches what we see on the charts, is that we're due for a very impulsive bounce. And that would mean the VIX is going to crush back from 18 all the way back down to 13. This is the trend we've seen in this bull market all year long. And a lot of the time we've seen the VIX very low. And then from that low VIX, we get these pullbacks and we repeat the trend of VIX to 18 all the way back down to 13. So that is currently what we are looking for while the VIX is below 18. Above 18, we get more fear, which is likely going to lead to high volume panic selling, and then we can go for that next leg lower. On Bitcoin, we're currently flat, trading just above 26,000, and price action is back below all the moving averages yet again after we got rejected from a lower high. So if we come back down to critical support at 25,000, there is the possibility of a lower high into a lower low, which would be high volume selling down to about 22,000. However, we need to see it, and critical support is 25,000, meaning we don't need to break below it, and there could be plenty of buyers at that level. So do not just blindly short at 25,000. If you're shorting Bitcoin, that's where you want to lock your profits. Or if you're waiting to get bullish, simply wait until we can get a daily close above 28,000. On Tesla stock, we were up 0.86% today, and Tesla is back down to the support trend line, which is this level right around 245. And as you can see, we closed the gap and continued lower and left another gap open at 262. So the projection that we would fill the gap and start to bounce was obviously incorrect because we failed to hold that support at 256, and we did break down below all of the moving averages with the price action. So right now, if Tesla is below 244, I would get risk off because below 244, we could come all the way down to fill this gap below 218. If we can hold 244, it does look like we could hold a retest of this previous low, and that's also right around the support trend line. So manage your risk right there between 245 and 244. If we start to bounce, we're looking for the gap fill above at 262, and then above that, we'll be looking for that strong resistance, which is now going to be right there at 274. And if we can break that resistance, then we're looking for 290 and 296. On Apple stock, we were up 0.74% today, and Apple is still holding this very critical support at 174, and there is still a possibility of a double bottom from 174 if we can get a break above the neckline at 179. So 174 is the critical support, meaning if we break below it, I think there's a good chance we go to 167. And if we break resistance at 179, you're looking for a gap fill right around 181.5. And then above that, we have a gap to fill above 190. So 179 critical resistance, 174 critical support. Trade the range and then trade the breakout, whether we break the support or the resistance. So jumping back over to the S&P 500, I still think there's a very good chance this pullback is concluding as we finish up the month of September. And this is a very typical September. They're very bearish and they're very volatile. And this is very typical and normal to correct during this month. So we have now had a pullback that lasted August and September, and I think this is a great opportunity to look for the bull market to return in October. So watch that critical level at 430, and if we break below that, we're likely going to 420. But if we hold from here, we could have seen the bottom of this pullback, and we're getting ready to go to higher prices. Always trade when you have well-defined risk, because even if you lose, you know exactly how to manage your risk from 430. So this is the time to take on risk, knowing that it is very well-defined, and you should not be afraid of losing because you are always going to have losses in trading. Nothing's 100%, so you need to understand how to manage your risk. And if you learn to manage your risk appropriately, you are going to win more than you lose, and your winners are going to be larger than your losers. We are absolutely crushing this market on the Stock Channel Discord and Bank Trade Alerts. And now is the best time to join Bank Trade Alerts, and the Bank Labor Day sale will be expiring, so be sure to take advantage of that discount, which I'll put in the description below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.